it's your favorite cutie, Mel, back again on my Soul Pot channel to give you guys yet another video. And today we are continuing our Forex study session. Okay, you can just look at me as your fellow student, tutor, study partner, all of that. Okay, that is me, and I'm here to talk to you today about lot sizes. So if I encourage you guys to start this series from the beginning, I have a Forex playlist, so definitely make your way down because I'm working my way up with each video. So I don't want you to not understand something that I'm speaking about because you're just hopping in. This is for beginners, but you know, you need to know about like pips and all the things that we talked about prior so that you can follow along to your greatest capacity. All right, you guys, so let's just hop into it. Go ahead and give this video a thumbs up if you guys have been with me for all of the videos, or if you're new here, also give me a like. It helps people to be able to find these videos. So all right, let's hop right into it, you guys. So we're talking about lot size today. Yay, we're moving on up. Okay, so basically there's three, as you can see, three main types of lot sizes. We have the micro, the mini, and the standard lot. Now these are very important. Why? Because yesterday we talked about pips. So basically the money that you make depends on, or lose, depends on how many pips you gain or lose, basically. And this is where lot sizes kick in, because this determines exactly like how many dollars, how many cents am I making, you know, per pip. So that depends on your lot size. So we're going to start with micro. When you are placing a trade, you're going to be asked to put in a lot size. So micro in Forex is 0.01, and this is the equivalent of 10 cents. Don't get caught up on how this looks if you are used to USD, because you might mistake this to be a penny, 10 cents, and a dollar, but that is completely incorrect. And if you don't know what you're doing, you can blow your whole account just by not knowing this information. And when I say blow your whole account, that means lose all the money in your account. You'll have to start completely over, okay? And you don't want to do that. So pay close attention and make sure that you triple check before you place any trades to make sure that you know how much money you're going to be gaining or losing prior, okay? So let's just hop back into it. So micro is 0.01 in the market, and that equals 10 cents per pip, okay? So let's just do some quick math, all right? So if you were to gain 5 pips in the market in a micro lot size, you would make what? If you're in the live chat, go ahead and feel free to go ahead and tell me what you think, all right? So easy, okay? You would have gained 50 cents. So this may seem little to you guys, but it's very important to start off with micro just in general, so you can learn to master the skill of trading and you're not blowing your whole account and losing all of your money. It's very important to start off there. And also, you should not be using mini or standard if you do not have at least, well, actually no, you should be, let me phrase this correctly. If you have 1,000 units of whatever currency you're using or less, you are in the micro region, okay? So you need to stay in the micro region. So let's say you're talking about USD, because I live in the United States and my main currency is the dollar. So I would not be venturing off into mini or standard if I only have $1,000 or less to trade in the markets, okay? You want to make sure you are taking proper risk management. We are not gamblers, okay? We're not gambling our money. We are taking educated and, you know, calculated risk. And that's why you really need to understand this. Otherwise, you could just blow literally all your money within seconds. It really can happen. It really can happen. Okay? Because the markets can move up and down very fast, especially depending on what currency, what time of day, how volatile the currency pair or whatever you're trading is. You literally could lose everything, especially if you're starting off new and say you're trying to start off with like just $100. That $100 could easily be gone very quickly at a mini and especially at a standard lot, okay? So let's move on. So let's hop into mini, okay? Let's say, you know, you have more than $1,000 and you've kind of mastered, you've gotten a little bit better at gauging the market, and, you know, you had some wins and you feel comfortable within the markets. Then you might be interested in hopping into the mini category, okay? So mini in Forex is 0.10, and that equals $1. So like I said, I'm going to keep saying, make sure you triple check your lot size before you place any trades. So this is $1. So let's do the same math, okay? We're just going to keep it easy just for the sake of understanding, because that's what we're here for. Or actually, I could just go backwards, right? You won't break my soul. All right, let's hop back in. All right, so under the mini lot, if you were to gain 5 pips in the market under USD, how much money would you make? Go ahead and drop it in the chat if you know. You would make $5 per pip. Okay, 5 pips, $5. 10 pips, $10. 100 pips, $100. Okay, and likewise. So if it's going down and you are minus 5 pips, you would be negative $5. And that's why it's important to really pay attention to how much money you have in your account with these sizes, because if you only have $50 and you're trying to grow your account from $50 and you're in the mini lot, it's very possible for you to just completely blow your whole account, because basically after you reach what your broker is leveraging you, which is, you know, whatever you put in or whatever, once you are out of that money, they're going to take you out of the trade. So even if your particular trade you're in goes back up to profit, if you don't have enough money in your account to handle the market, then basically you're just going to be taking out altogether. They're not going to let you go into debt so that you can then catch profits. So this is why it's so important, because you don't want to do that to yourself. Like, you know, you want to get in and out at a comfortable, reasonable, you know, amount. So let's hop into standard, okay? Standard is also a lot. All right. And it's going to look like 1.00 in the market. So for every standard, you are going to make $10 in the market. So let's just keep going for the sake of simplicity with this same equation. All right, so let's say you're about to enter a trade and you type in the standard lot, okay, and you put 1.00, which is $10 per pip, and you gained 5 pips before you got out of the trade. You would have made what? By now, you guys all know. Let's say it together. 1, 2, 3. You would have made $50. Okay? Perfect. All right. So now let's get into more about how you can calculate everything. Let's see. So I'm going to just back up right here. Okay, I'll leave this open. So now we're going to be talking about a simple formula that you can use. You also can calculate this online. There are lots of Forex calculators online if you want to triple check, which I suggest until you like really know what you're doing, because like I said, this could be crucial, very crucial. And I know I'm going to be watching my back, okay? So let's hop into it. So a simple formula will be the lot size. Actually, I should abbreviate so that I don't have to write everything out. So the lot size, which is LS, times the number of pips I'm just going to write this out so you guys don't get too confused. Number of pips, and then times the number of lots, because you can get more than one lot. Okay, so let's see, number of lots, and that's going to give you your total gain or loss. So I'm just going to put money right here. So let's go ahead and get an example. I'm going to get my phone out and I'm going to hop on MetaTrader to get a real life example. Okay, so let's just, I always use the same example. Let's just go with the euro dollar. Okay, so right now, currently, oh, that's the Aussie. Okay, yeah, let's go with this. So we're going to do the euro dollar, which is 1.0465, and I'm just gonna leave it like that. Okay, so this is currently the euro USD. Okay, y'all know what that says, hopefully. All right, bam. So if this is where we're starting at, and we hop in and we get out, just for the simple sake of easy math, and we made some money, and we're getting out at, let's do 85. So let me get out my calculator. No foundation, yeah. All right, so let's do this. You won't break my soul. You won't break my soul. All right, let's see. Okay, 20 pips. All right, woo, we made money. Let's do green for the money. So this is 20 pips. So let's do an example. Let's go ahead and use this formula for micro, okay, which is what I'm going to be using to start off. So this is going to be very useful for me. Okay, so the lot size is basically 10 cents for me. I can't remember if they put in like the actual, it probably doesn't matter. So let's see. You okay, Jingle? Times 20. And then I'm only doing one lot size. So let's do the math and let's see what comes out. Okay? No foundation, yeah. 20 pips times 1, because one lot size. So we would have made $2 actually. What? Let me do it. Let me check. Oh, foundation, yeah. Don't hurt to triple check. Okay, yeah. So actually, it would be $2. We would have made $2. Okay. Let's go ahead and that would have been our profit. Okay. So let's go ahead and do the next example. So let's go ahead and just plug it in. Use the eraser so I don't have to rewrite all of this. You won't break my soul. You won't break my soul. And really, if you're only doing one, we really can just not even do this part and just do the lot size times the number of pips to get your answer. So let's do 1.0. Or you can just go ahead and put in, so if it's another way we could have just made it even simpler is instead of putting in the decimals, we could just put in the actual cents. So we could have did 10 cents times 20, and that gives you $2. That gives you a clearer answer, honestly, so I'm going to do it that way. All right, so let's go ahead and calculate some pips. So obviously if we're making $1 per pip, 1 times 20 is obviously $20. Bam. So let's just hop into the standard. So obviously we know the answer is 200, but just for the sake of going through, let's just hop through right now. So it's 20 pips times $10. That's $200. Okay, let's just do one more example to solidify this in our mind. Okay, new example. Oh, I should delete this too. You won't bring my soul. You won't bring my soul. But the thing is, okay, maybe we can do one where we have multiple lots as well, just to give us another example, okay? So let's just go ahead and give ourselves the homework that we need to understand, right, study buddy? All right. So let's go up to 93, okay? So let's just do the math on the pips. Easy calculations. 493 minus 465 equals 28. So that's 28 pips. Let's just write it down. 28 pips. Sorry, y'all, that's so ugly, but it's okay. We just remember. 28. All right, so let's plug in this equation, all right? So let's start with micro. So we're going to do 10 cents times 28 equals, that's $2.80, okay? So that's $2.80 if we were using the micro. And let's just do, let's say we had 3 lots of the micro, okay? So let's plug in a 4 right here for the rest of the equations, just so we could get the practice that we need, okay? So let's hop into it. Let's go back to micro and do that again. So all right, so we would have 10 cents times 28 pips times 4, because we have 4 lots. Okay, so that would be $11.20. Okay, so depending on how many lots you have, that can increase your profits or your losses. So bam, let's hop into the next one. Easy peasy lemon squeezy, right? So we're gonna do $1 times 28 pips times 4, and that's gave us, you would have made $112 with this, okay, off of 28 pips. And last but certainly not least, let's do the biggest one, which is $10 times 28 pips times 4 lots, and that gave us $1,000 how do I even say this? Oh my gosh, $1,120. Okay, so bam, that would be our profit. So you really can scale your account, but you just need to know the difference in what you're doing so that you don't lose all of your money, okay? Because what if you did this and you only had $100 in your account? Well, you would have busted your whole account if you would have lost that money, you know? So you have to know what you're doing. So you can make a lot of money, but you also have to take proper risk management, because you're going to have losses. Like, you know, you have to know what you're doing, and you have to know also how to implement what we're going to be talking about next in our next video, which is things like stop losses, to make sure that you're really not blowing your account. Okay, so that's all we're going to do for today. Thank you guys so much for joining me. As always, stay posh and stay cute. If you like this video, give me a huge thumbs up, and check out the other videos that I have on Forex for beginners, and let's keep learning and growing together. Okay, it's been a pleasure. Subscribe to the channel if you like this kind of content and you like to learn how to make money online. Okay, so I'm going to end it here. Bye, you guys.